To what extent does the 80-20 rule apply in your business, where 80% of your revenue comes from 20% of your customers? It certainly applies to many businesses, and even if it's only 70-30 in your case, this means that those 30% of customers are much more important to you than most. You certainly wouldn't want to lose them. So when you think of those key accounts, how strong are your relationships with them? And how do you know? How do you measure it? Most business leaders will answer those questions based on either revenue or volume of sales. We must have a good relationship because they buy so much from us. Important as that is, it would be dangerous to assume that it means the quality of the relationship is high. They could be buying so much because you're the cheapest, or because they simply haven't explored other options yet. Also, if that's the only measure you use to assess the effectiveness of your account managers, it could cause them to focus only on getting more sales, which could in turn result in behaviours which end up antagonising the client. So, what other objective measures could be applied? Well, how about how many of their people we know? It's measurable, and if we have multiple contacts within their business at multiple levels, that's one good indication of strength in the relationship. Similarly, how many of our people at multiple levels do they know? These aspects are known as contact surface, and not only does it give us more sources of information about the account, it also makes it harder for them to switch supplier. Then you have other objective measures such as the number of products they've bought. The more products or services they buy from us, the harder it is to leave. How about frequency of contact each year, especially with the key decision makers? How about whether we have sole supplier status or whether they put work out to multiple tender each time? What about the level of decision maker we're speaking to? Are we at board level or are we dealing with junior managers? You could even have more unusual measures such as their attendance at our marketing events. Do they always come themselves? Do they always send a substitute? Or do they just not come at all? You can probably think of other factors. As long as it's possible to assign an objective score, it avoids making assessments based on revenue or personal liking. All of these factors can be put into a scoring matrix. We call it a relationship assessment matrix, and the best way to devise it is by working with your account management team to build the criteria for your business. Once it's done, you can firstly score your top 20% using the matrix. You may get some surprises. Secondly, and more importantly, you can then agree specific monthly action plans with account managers to improve the overall score based on the criteria and coach them on those actions. As the score improves, so does the quality of the relationship. You won't need to worry about selling more to them because you'll be the obvious choice when they have a requirement, and you certainly won't need to worry as much about losing them. This is just one of the key account development tools we work on within the Sales Leader Programme, amongst many others. For more information on the next programme, check out our website at salesleaderprogram.co.uk. You'll also be able to download an example of a relationship assessment matrix and a blank template from the resources pages on the website. Thanks for watching.